Hello and welcome to the macro of it for the week beginning September 4th, 2017. I've been highlighting September as the month to start looking at, and the reason for it is that there's going to be some fairly big changes to macro thematics and most likely to macro policy, particularly monetary. Although this week the RBA is meeting, it's not the one to watch, and there is 4 of them coming out. The RBA on Tuesday, only thing to really look at on terms of what that is there. The statement, it's clearly after what happened in August, a really key thing. They were quite a lot of changes. It very much highlighted things like wage growth. It very much highlighted the currency and what the currency is doing. They are the things to really concentrate on. Always also concentrate on their commentary around China, because again, the Chinese economy and particularly the Asian economy is a major part of our exports. It's a major part of our terms of trade. And if they do see changes there, that's always something to be sort of sitting up and watching. But in the main, they're out of the market and they're not really the point that you want to highlight. It comes on basically starting from Wednesday all the way to Friday morning for us here in Australia. You've got the Bank of Canada. I highlight the Bank of Canada because the Canadian economy is very similar to ours. They are more leveraged towards oil, I understand that, but they are very similar. They actually went harder than we did during the sort of the GFC period to sort of try and stimulate their economy. They had lower rates and they have been tightening. I don't expect them to do so, but there is signs that they are gearing up to give another reason to move another 25 basis points sometime in 2017. And that's a real interesting point for those that are watching for the possibility that the RBA could do it next year. BOE is also meeting. The Bank of England's an interesting one. They have been very much and were the more likely bank out of all the others outside of the Fed to raise rates sort of second behind them in the post-GFC world. But since Brexit, they've been moving away. But if you look at the signs, if you look at the economy inside the UK, it's actually reasonably pretty good. And that therefore may have to reverse Mark Carney and Co.'s current position. And again, it's the statement. And the one to really watch here is what we call cable, which is the pound to the US dollar. The reason for it, Brexit has severely sold it down, and that's been a real positive for their economy. UK exports have boomed on the back of it because they are cheap in terms of what they look like to the rest of the world. And that's this conundrum. So watch the BOE as well. And then the big one is the ECB. I've highlighted Mario Draghi and what he's been alluding to. I've highlighted the fact they've got a hugely unconventional monetary policy with negative deposit rates, a lending rate that's basically zero. He has been gearing up to change that. I don't think he'll do it on Thursday night, but there are signs, and there are certainly signs in the PMI numbers you've seen out of Germany, France, and even Italy, that he could start to tweak it. And it may happen on Thursday. I don't think it will, but there is definite signs that it's likely to happen in 2017. So they are something to be aware of, and it will affect us. And the reason I say that is that tightening just adds a layer of volatility, and that filters through to equities, it filters through to currencies. So it's just something that you have to have in the back of your head, and certainly something to be watching, because those economic changes will affect your trading.
Did you know that your membership gives you access to InvestSMART, Intelligent Investor and Eureka Report? Just use your original login details on all 3 sites, or go straight to investsmart.com.au, where you'll find all of our content, no matter where it's published first.